Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the morning end of Swing Trading Show. Today we're Tuesday, May 19, 2015. The question bar is open, folks. If ever you have any questions, feel free to ask them. Yesterday, Canadian markets are closed, but American markets were open. And yesterday, though, American markets have actually slightly pursued their rally. Let's just put more data here on this model to see the situation where we had a slight pursuit of the rally on the American markets. Today, we have a situation where we again have what's called again a new neutral phase, and this is according to an article that we've posted on our Facebook page, the new neutral phase. What happens is that, first of all, in the last week around Wednesday, Thursday, Tuesday, we actually had a slight sell-off in the markets because yields were rising. Why yields were rising? Well, first of all, we had a recent rally among oil prices. We had better than expected economic data in the Eurozone. So investors are saying to themselves, look, why should I continue to hold on to bonds? Because yields on them are actually really low with the loose monetary policies adopted by the ECB, by the Fed, by the Japanese Central Bank. And if ever we have the recent oil rally, the better than economic data in the Eurozone, we're going to have inflation that's going to spike up. So if inflation is going to spike up, according to our expectations, instead of holding on to bonds, might as well put them into equities. So this is why we had this recent rally that actually explained why the NASDAQ and the Dow Jones and also the SPY, which we saw here, went actually up. However, this rally is going to be dependent, the pursuit of this rally is going to be dependent, first of all, on the pursuit of the loose monetary policies and also on the strength of the economic indicators. So this is why for the next few weeks it's going to be important to see how the economic indicators play out. If ever they show some strength, better than expected, we might see a pursuit of the rally. But right now, with the markets SPY that have actually broken up this resistance here, pursuing its rally slightly, even if we do have this situation, we still believe that this breakout, this bullish cycle is kind of fragile. And this is why on MarketGurus.tv, we have again continued to remain patient before closing our positions on SPXU. You see, there's still that downward corridor that the SPXU is testing, And even if the SPY is going up gradually, though, we're still unable to break the low of this downward corridor. So yes, we're slightly losing some money since we have recommended that bearish ETF here on MarketGurus.tv. However, we want to remain patient though, because as I said, this rally is going to be based on the strength of the economic indicators, and so far the recovery remains really, really fragile. Now, if we take a look at the situation here on the TSX is actually a sector that remains neutral. On MarketGurus.tv, there are two sectors that actually making the TSX neutral. First of all, we have some weakness in the resources. A weakness in the resources is first of all in gold. Gold, I believe that those of you who want to buy HGD should actually, it's a good strategy. At opening, gold went to the new low, but it was stabilizing. What we say on MarketGurus.tv is that on the new low, open some positions in bearish ETF such as HGD. We did the low, now we're stabilizing. Now the new target on gold, GLD, if it goes down, is around 114, 115. So this is actually the new target. So if you're buying HGD, this is a small potential that you have on gold, which is all about for day trading. As for the gold sector, though, I want to make a follow-up, especially in those of you who bought some positions here on the gold sector when we have the beginning of a bullish cycle. Well, a lot of those positions, though, I think some of them you should already have taken some profit, such as Benro Corp. But there are others that are actually at risk of closing them. For instance, Dator Gold. Well, you see that Dator Gold right now there's the reversal of this upward trend. So what I said on Dator Gold is that if you didn't buy it in the breakout on May 7th, if you bought it on May 8th or May 9th, well, you could have trend trade that stock and hold on to it as long as it maintained its upward trend. Right now, we have the reversal of this upward trend. So Dator Gold, it's a position that you're going to have to close. Oceana Gold, you can give it a shot. You can give it some chance because this upward trend will be reversed below 270. And Alamos Gold, you could wait for the stock to break 825, which is that support. On MarketGurus.tv, we have an exposure on the gold and silver sector. It's Pan American Silver. So far, that stock is resisting the correction that we have among gold stocks, so we're going to continue to hold on to it. But if ever we have a pursuit of the correction, definitely that's going to trigger the closing of our positions on PAA on the TSX. We also have a weakness in oil. If we take a look at the situation here, oil has clearly broken down an important support. Now let's put more data on oil here to give us a better perspective in terms of the target. First of all, oil here, right, we see that we have tested this upward corridor there. We went lower than this upward corridor here on May 14. On May 14, when I said HOD was a go, the target was $20. We reached $20, we rebounded, and we stabilized. So I said that around this situation, it was tough to determine what's going to be the new direction on the market. At opening, we went even lower than $20. So now we see that the new target on oil becomes now $19.50. So those of you who are opening some positions on HOD or SCO, then those bearish ETF, though, should actually perform well until $19.50 for USO. And on the energy sector, though, we have a clear bearish cycle. Actually, the bearish cycle is kind of clearer on the US. On MarketGurus.tv, that you can have access for free for 10 days, we have released a list of the short opportunity, the short selling signals on the energy sector. So first of all, if you're not comfortable to short, there's ERY, which is a bearish ETF on New York to track the bearish momentum of the energy sector. Now, there are several breakdowns. There's Cameco that is clearly reversing its upward trend, so it's a clear breakdown. If you bought within the Saturday formation in Cameco, you have to close it. Want to mention Cameco too because last week there was a bullish momentum among uranium stocks, but this bullish momentum with the sell-off that we have today among the energy sector, several of those positions have to be closed. Cameco on the TSX, for instance. Denison Mines, if you bought it here, I think with this correction, you might as well close it right now instead of holding on to that stock below $1. Mega Uranium might as well close that position instead of waiting for the break of that support. So really, you're in a situation where you're going to have to reduce heavily your long exposure on the energy sector if you still have some. And in terms of the additional breakouts that we have in the U.S. markets, there's also Suncor, which is breaking down in the U.S. There's Baker Hughes, that is also Superior Energy Services, that is breaking down as well in the U.S. Cosmos Energy. So those stocks are not great short opportunity. For instance, for Cosmos, it's a breakdown, yes, but you see that there's a support at 836, another one at 791. So we just put it in a breakdown just to tell you that those of you who bought the breakout here or within the salary formation, well, now with this breakdown, it's a moment to close our positions to avoid having to tolerate a loss until 838 or 786. Schlumberger, it's a breakdown as well, but a stock, first of all, that has, well, it could be a nice short opportunity for Schlumberger. The thing is that it did a short opportunity here, didn't perform well, stabilize. So that could be the short opportunity that could propel Schlumberger lower. Look at the stochastics there. So yes, Schlumberger might be among our analyst choice if it can maintain that decline. Halliburton also as well, Cameron. So really a sell-off among energy stocks. It's nothing positive there. With oil breakdown, energy stocks also following, and with gold, so for a lot of those positions that you bought last week, she's gonna have to be reduced slightly. Now, Mark has a question here on PDL. Chris, what should you do with my PDL bought at 36 cents? Mark, this is why it's important to follow to be disciplined and close your positions when you have a selling signal. You bought at 36 cents within this other information, right? Well, sorry, we bought here, 36 cents, right? Now you bought at 36 cents. First of all, we had the reversal of this upward trend. So you had an opportunity to close at positions around 30 cents when we reversed this upward trend on PDL. You didn't. Now the stock stabilized, okay, might give it a chance. And again, you had another opportunity to close it below 25 cents. And what happened here is that there were some concerns that the company might not stay afloat because they have too much debt. I just saw a press release saying that they're talking with Brookfield Partners that could allow them to actually stay afloat and survive in this tough environment. I know the company still produces, but still they have so much debt. So the stock is being impacted negatively now. Now, stock is at 6 cents. I think at this price, though, I think to avoid having some risking, you have 10,000 shares, I think I'll diminish my positions totally, or even reduce it to by 3/4 of my position. So have 2,000 shares instead of 10,000 shares. And for me, if it goes below 5 cents, that's a sell off on that stock. You have to close that position. Right now it's stabilizing, but you lost so much. I think that at this price, though, really is going to be so negative. So you might as well reduce your position now, or at below 5 cents, you close it totally. And for me, this is a scenario that you have. And it's really, next time, make sure that you respect your position, your stop loss, because on that position, so that was not a good trade.
Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show.
So I hope, Mark, that will help you for your positions. For next time, we all learn. We all make mistakes as traders. So next time, just make sure that you put your stop loss on a position like that. It's unfortunate that you had a position, was doing okay, and on the news, well, the stock took a big hit. Now, Jack has a questions about the Fed meeting about tomorrow. Can it move the market? Well, usually the FOMC minutes, what we have realized is that recently they're not really big market movers, according to the FOMC minute. I think the thing that could make the markets move is that if we see that the members, because the minute's only a summary of the previous meeting. So if we see that on those minutes that there have been a lot of divergence between the members, that a lot of them wanted to have a rate hike and some of them said no, well, that might explain maybe some volatility on the market though. But on the last meeting, we had mostly unanimously members that were saying that we need to keep the least monetary policies. And I think the Fed already gave itself some maneuver, because they said that, first of all, they might raise interest rate, but it didn't put any clear deadline. And they also say that, we will just be based on market conditions. So investors just be ready. It might happen. Maybe this year, maybe next year, we don't know. So I think the Fed gave us a maneuver by not actually putting some clarity. So can it move the market? Yes, it can. But I think one thing that we can see based on the last meeting is that if ever there's a big divergence, we might see actually maybe some volatility there. But it's tough to say what's going to be the new direction, because it all depends on many factors that investors might interpret. But tomorrow, definitely, we'll look forward to it. And if ever there's any moves on this particular sector, well, on MarketGurus.tv, we'll talk about the particular sector that are worth investing and worth shorting. Now, hi Chris, Midway Gold, MW, after a big sell-off is due for a bounce. Indicators not pointing a positive. What to do? Analysis, please. Well, first of all, Paul, it's a stock here. Look at this downward trend, right? This downward trend, I've tried to connect the bottoms here that we have tested many times on that stock. So a bottom that we have tested here, there, and there. And we see that we even went lower than this bottom here. So that was a clear, I'll get this out for you. So here, that was a clear negative signal. Now, what are the momentum indicators are showing us with that stock? First of all, let me say that if ever there's a wave of bars that's consistent on that stock, what are the targets? One thing you could do with our Market Vision software is to put a Fibonacci retracement from that top to that bottom. And you see that to reach the 23.6% of this decline, the stock could reach 31 cents. Now, can it do so? Are the momentum indicators showing us that the wave of buyers is consistent? Let's start with the stochastics. Oversold stochastics, but so far, not a wave of buyers that's consistent. We need the stochastics, 933 stochastics, towards the 30-40% range. It's not what we have. So the wave of buyers is not consistent. MACD, it's not showing us that as well. The red line is still below the blue line, so it's still not positive. And so far, the histogram, the MACD histogram, what is it showing us? Well, we're starting to get into positive. We're starting to be a little bit less negative, but we're not yet in positive territory. So first of all, you need the stochastics around the 30% range. You need the MACD to start to be towards the overbought situation. And you also need the MACD histogram to start to be in positive territory to confirm the wave of buyers. If we do have that, 30 cents will be the first target for a stock like Midway Gold. I don't think that right now it's worth to buy that stock. It's only a first day of rebound. I've also shown you that how risky is that stock, because that's important downward trend that we had for several times where the stock had a rebound. Well, we cannot rely on it anymore. So really, even this one here, we cannot really rely on it, because this one that has been tested several times, we also even went lower. So this is why I think that it's kind of risky. And if ever we could actually have a clearer confirmation on the momentum indicators, well, then 30 cents could be the first target on a stock like that for Midway Gold. So that might be worth for a nice rebound. Now, have you improved your day trading score lately? Well, Eve, I have to be honest with you, we have not have a lot of time to be able to dedicate ourselves to build this day trading portfolio. What we're trying to do is that whenever we have some, for instance, on Monday, American markets will be closed. So we're going to try to develop a strategy. But really, we're trying to put our attention right now with the portfolio for swing trading. And as for the portfolio for day trading, what we have decided so far is that if you want to improve your day trading skills, well, the best tool that you have that we offer is the class of Michel, and it's in French only. And you can actually have access to all the techniques, also to all the softwares of Decision Plus if you take that class to improve your day trading skill. And Market Gurus, for the moment, is going to be heavily dedicated to our swing trading portfolio. So which means for people who buy stocks and hold it for 1 week, 2 days, 3 days, or so forth. So this is actually what we have decided. But this idea is still in our head, and definitely we might consider to adopt the theories that Michel is sharing in his courses, adapt it to Market Gurus.tv, or potentially maybe build a product that could only be specified for day traders. Those are only theories I'm talking about, but nothing have been cleared yet. But as I said, we're focusing on Market Gurus.tv, on our swing trading portfolio. And if you want to improve your day trading techniques, the classes of Michel actually is the best tool that we have so far to help you guys become better day traders. So the show is over, folks. There's one last question that I'm not able to take. I'm going to take it tomorrow. So tomorrow, CXA, I'll answer your question. And now, as for the day trade of the day, it's that stock here. Sorry, it's HOD. So we put HOD because oil is negative. We believe that the energy sector could pursue its downward momentum. So HOD has been and is our day trade of the day. It's really likely that we might put some bearish ETF, some bearish stock on our analyst short portfolio on marketgurus.tv. So we have 2 entry point, and he's just giving another entry point right now. But the thing is, I'd like to wait for another uptick. So we had a first uptick. I'd like to see a second one slightly higher than this one to confirm this trend of this entry point on HOD. And if you're not comfortable with HOD, well, there's SCO on New York. And if you also had some bearish ETF, you can also open some bearish ETF on HED, right? Or on ERY. Those are also some alternative. And on marketgurus.tv, we already have HED. So we might consider to take some profit on that stock, but we were going to remain patient because we believe that the downward momentum on the energy sector could continue, especially with major big caps in the US that today are breaking down. So that's it, folks. See you tomorrow at 12:30 on the Swing Trading Show on decisionplus.com.